Hey Charles, how are you today?
Good, thanks, Rob.
Awesome. Here there's some exciting news about BTCS from this past week.
Yeah, we've had a couple releases and they're exciting. So
I think the one that's of a pretty notable interest to shareholders is that equity plan from the leadership team. So maybe you can dive in a little more details about it.
yeah, it's kind of a complex one, but it's at its heart really we're taking a pretty big bet on the company. So we have these called restricted stock units. It's basically equity that we only earn if the company hits certain milestones. And right now those are tied to the market cap reaching 100 million, 150 million, and 300 million with various tranches that get vested when that happens. When that happens, though, when you vest, you actually owe the IRS, whatever the fair market value is of that stock, you owe ordinary income on that. And so what we did is we basically exchanged the RSUs for restricted stock. So then we own that stock. But if we don't hit those vesting requirements, the stock gets forfeited. So it's basically the same thing. However, once you own it, you can do something with the IRS called filing an 83B election. And that basically says, hey, I'm going to raise my hand and pay taxes on the value of that stock today, even if it's subject to forfeiture. So if you lose it, you pay taxes hoping the company hits 100, 150, or 300 million market cap. And so that's about across the whole executive team, about $500,000 that we're going to raise our hand and pay taxes to the IRS for to get shares that we may never get unless we hit these milestones. So it's very advantageous to us if we hit the milestones, and it's actually really advantageous to the company. So if we do hit those milestones and we were to earn it and we hadn't done this, it means we have to pay tax at the market value, but the company also is going to pay the withholding tax. So think about it's ordinary income. Like everybody, you go to work, you get paid, and the government takes a huge piece of your paycheck depending on what tax bracket you're in. And so when that happens with restricted stock, the company can pay, and almost all public companies do this. It's called net settlement. You would only take the shares net of, up to a max of 22.5%, in which the company would hold back and then pay the taxes on your behalf. But it doesn't mean the company's actually sold those shares. It actually becomes a liability to the company. And so by doing this, we own the stock, we've paid the taxes, so there is no net settlement. And so when it vests, we don't owe any tax because we prepaid. But it also means had we not done it, and we were to hit those milestones, I think our back of the envelope math would cost the company about $2.6 million. The company would have to pay, if everybody net settled, the IRS the 22.5% on the market value of those shares, that's a lot of money that's going to come out of pocket for the company. So in doing this, we are taking a bet that we're going to hit those milestones, paying taxes, which we don't get back. And if we do hit the milestone, saving the company a substantial amount of money.
So what are those milestones?
So it's 100 million market cap is a third of it, 150 million market cap, and 300 million.
All right. And so it's a third.
Yeah.
And is it the company that is paying that tax upfront right now, or there's some members that are individually paying it?
We've all individually paid, right? Because we haven't paid yet, where you do the filing and you pay when you do your taxes. So we'll be actually writing a check to the IRS.
Okay.
When it was April 15th is when it would be due 2026. But we owe that, right? Like there's no getting off the hook. Once you file the paperwork, the IRS wants, that's out of pocket, not coming from the company.
And let's say the stock price doesn't hit 100 million this year at all, the first milestone. That would mean you basically paid that tax upfront for nothing because you wouldn't receive the shares because you wouldn't hit the first milestone.
Yeah, we would technically own the shares, but they would be given back to the company, so it'd be forfeited.
Forfeit. So that's a pretty big bet on the company. So you must be excited about a lot of stuff that's happening in the future.
Yeah, and we have until December 31st, 2026 to hit these milestones. So, the hope is, hey, we're pretty confident in the company. We put out, what our revenue milestones are in terms of, not guidance, but what management's comp is tied to. And our target is 8 million revenue with a stretch goal of 20 million. And that's what we're internally working for. So, our hope is if we can start putting out numbers like that, and the valuation increases and we hit those numbers, then we're going to vest this stock, and it's a huge tax savings for us if that occurs to do it this way. If we miss, we basically forfeit the shares. The IRS does not give us our money back. We do get to claim a capital gains loss, but that can only offset gains. And I think you can deduct under current rules $3,000 a year from your ordinary income indefinitely. So that's a long way to get you're not really getting your money back, right? You're getting either you have to have some great returns to recoup to offset it, but it's basically an out-of-pocket expense. I kind of look at it as it's a bigger bet than just buying shares in like the open market. And investors always love, hey, the executives bought shares in the company. Like this is like we're kind of paying taxes on shares that we may never get. Does that make sense?
And a lot of what is the catalyst for the excitement is investors will see the revenue growth in the company over the most recent quarter based on your public investor deck, right? So maybe you can talk a little bit about why the company's revenue has grown so much recently, and maybe that is a catalyst for why you decided to do this sort of plan.
Yeah, I mean, it's 100% the catalyst. So when we pivoted into block building at the beginning of 2024. And that has been the biggest revenue growth driver for the company. We spent 10 months figuring out accounting, going back and forth with the SEC. So we didn't really step on the gas until, the fourth quarter. And so we publicly put out that, we did about 3.7 million in revenue for, unaudited revenue for 2024. The majority of that is in the fourth quarter. So these numbers aren't, out in an audited capacity yet, but that's, we're optimistic that growth is sustainable on a going forward basis. So, if we continue to execute, it kind of looked like this is a no-brainer. We should, why not file those elections, take that risk. And if we're right, we're going to save a lot of money, right? We're going to save the company money in paying taxes for us, and we're going to save a lot of money ourselves not paying taxes, because it's not that we're not paying taxes. We will have prepaid our taxes.
Exactly. And
yeah.
And when can shareholders expect the next quarterly update on your revenue numbers?
So, I mean, we've kind of put it out there in an unaudited fashion. That's obviously not flowing through to mainstream media, right? You're not getting it on Yahoo Finance. You're not getting it on Google Finance, any of the brokerage apps, because we haven't filed our 10K. The 10K is due March 31st this year. I'd love to file it a couple weeks early, but that really will come, we're not the bottleneck, it's the auditor, right? So depending on when they finish their process, will dictate when we actually file, but there's no reason we would be filing late. We don't see any reason that would happen.
Awesome. Great. Well, thank you for the update, and everyone will be excited and waiting to see how that shows out in March. But I thank you for the update now. It's really exciting to see this, the strength and the confidence you have in BTCS right now.
Yeah, it's the, as I put in the shareholder letter, over the last 10 years, I think that the business model we've shifted into is the most compelling model for public companies, and we're the only ones doing it since, Bitcoin mining took off in 2017, right? We're kind of a cross between a MicroStrategy, hoodling, but we're doing Ethereum, and a miner circa 2017 in terms of, potential revenue growth. So, our whole team is super excited, and we're willing to, basically, pay the IRS, $500,000 effectively to, lock in potential, tax savings in the future, and on the belief that our stock our market cap can hit these milestones.
Awesome. Thank you so much.
Yeah, thank you.